You're listening to the Financial Source podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive. Today, we've got a big task ahead of us.
We certainly do.
We're aiming to synthesize a pretty complex global briefing, looking at everything from currencies, commodities like gold hitting records, geopolitical talks, even industrial policy shifts.
Yeah, the goal really is to give you that quick, thorough context. What's actually moving markets and policy right now.
Exactly. A shortcut to understanding the global picture. And it feels like everything's happening at once, doesn't it? Gold prices, the euro's stability, U.S. trade moves, they're all reacting simultaneously.
It's all interconnected, definitely. The main dynamic seems to be continued U.S. dollar strength.
Right. Particularly against the yen and the euro, which look a bit soft.
And then you have commodities, especially gold, telling this, almost frantic story.
Okay, let's unpack that, starting with the currencies. Segment 1. Why is the dollar so firm?
Well, a lot of it comes down to policy expectations and specifically interest rate differentials. We're still seeing yesterday's selling pressure on the yen carryover.
So US GJPY is staying above that 150 mark.
Yeah, stubbornly above 150. And the reason, or a key reason, ties back to Japanese politics.
Okay.
The outcome following the LDP leadership change seems to have cemented expectations. The market now anticipates, near-term government spending, fiscal support, combined with the Bank of Japan continuing its very, very patient approach to normalizing monetary policy.
So stimulus plus slow normalization from the BOJ.
Exactly. And when you put that next to higher U.S. interest rates, that gap, that rate differential, becomes pretty wide.
Making the dollar more attractive.
Massively so, especially for carry traders. It's a strong signal.
So even though the yen is under pressure, the underlying policy expectation is just too strong for authorities to easily counter. I mean, did Tokyo offer any guidance?
They did. The official line is, currency moves should reflect fundamentals, avoid disorderly swings. Standard stuff. But you could argue that as long as U.S. rates are high and the BOJ is seen as patient, that is the fundamental driving things right now.
Okay, that makes sense for the yen. But what about the euro? It's also soft against the dollar. Is that the same dynamic or something different?
That's more about domestic politics, specifically France.
The uncertainty there continues.
It does. The euro softness reflects that lingering political question mark. President Macron has apparently asked the outgoing PM Lecornu to hold final talks with parties, just trying to stabilize the situation.
And political instability in a core Eurozone country like France that naturally weighs on the currency.
Absolutely. Capital tends to flow towards perceived safety, which right now is often the dollar.
Got it. And just quickly, any other currency movers catching your eye? I saw the New Zealand dollar, the NZD, was underperforming.
Yeah, that's right. It's mainly positioning ahead of the RBNZ, the Reserve Bank of New Zealand, their interest rate decision.
That's the expectation there.
Well, that's the issue. The market's really split. Some expect a 25 basis point cut. Others are looking for a bigger 50 basis point move.
So uncertainty ahead of the decision is causing the weakness.
Exactly. That kind of ambiguity often leads investors to just, wait and see. Hence the underperformance for now.
Okay, let's shift gears then. Segment 2, commodities. And this is where things get, dramatic. Gold.
Yeah. Spot gold hit fresh all-time highs, nearly $4,000 an ounce in Asian trading. It eased back a bit, but still.
$4,000. What is driving that? Is it traditional inflation hedging?
I think it's less about traditional inflation and more about maybe confusion hedging or uncertainty hedging.
Okay, explain that.
Well, hitting $4,000 an ounce like that, it feels less like a calculated bet against rising prices and more like a signal of low confidence. It suggests massive haven demand, investors paying a huge premium just to step away from political and policy uncertainty.
So it's the price tag on things like the U.S. shutdown stalemate or Middle East tensions.
Precisely. It reflects a lack of faith in smooth resolutions, whether it's domestic politics or international friction. Gold is acting like a crisis barometer.
Wow. Okay, so gold is screaming uncertainty. But crude oil seems much quieter, more subdued. what's keeping energy prices in check?
That seems to be down to clear signals on supply, specifically from OPEC plus gap.
Oh, what did they say?
Russia's Deputy Prime Minister Novak confirmed that the group didn't discuss raising quotas by more than that planned 137,000 barrels per day for November.
Okay.
And crucially, he added they didn't discuss any increases beyond November either.
So that reinforces the idea of controlled supply, no sudden flood coming.
Exactly. It provides a sort of baseline stability for oil traders, preventing those wild upward swings, at least for now.
Right. And meanwhile, we're also seeing some longer-term energy policy moves happening, aren't we?
Yes, sort of in the background, but strategically important. Ukraine is talking with G7 nations about getting additional gas imports.
Looking beyond the immediate conflict.
And evaluating a bigger shift towards LNG, liquid natural gas. And separately, Slovakia announced a deal with the U.S. to build a new nuclear power plant.
So moves towards diversifying energy sources and enhancing long-term security in Europe.
Definitely. Shows that forward planning is accelerating.
Okay. And just to round off commodities base metals.
They're generally steady, maybe slightly firmer. Copper had a good run last week, but participation's a bit limited right now because of some regional holidays, so something to keep an eye on.
Understood. All right, let's pivot now to segment 3. This is about trade, tariffs, and that growing friction in technology. Washington's talking tariffs again.
Yes, but it's quite specific this time. Japan's chief cabinet secretary confirmed Tokyo is aware of a U.S. proposal.
That's the proposal.
To slap a 25% tariff on medium and heavy-duty trucks coming into the U.S., supposedly starting November 1st.
Trucks. Okay, seems almost old school compared to the tech focus.
Well, yeah, it feels a bit like fighting the last war, maybe, but it's still a significant potential trade measure for that specific sector.
Meanwhile, policy coordination is still happening elsewhere, right? Like in North America.
It is. The White House is hosting Canada's Prime Minister Carney today. Trade is definitely on the agenda there.
But you mentioned the tech friction. That seems to be the bigger strategic trend.
Absolutely. Regardless of tariffs on trucks, the move towards hardening technology supply chains just keeps gathering pace. It's become a core policy direction.
And we have a specific example of that with the FCC.
We do. The U.S. Federal Communications Commission, the FCC, is planning a vote this month.
To do what?
To tighten restrictions further on Chinese telecom equipment that they've already flagged as a national security risk.
So more barriers going up in the tech space.
Exactly. It just underscores that while tariffs might be tactical moves, reshaping tech supply chains is now a fundamental long-term strategic goal. And it's intensifying.
Okay, let's move to our final segment. Geopolitical flashpoints and domestic problems, particularly in the U.S. Starting with the Middle East, there were talks between Israel and Hamas.
Indirect talks, yes. And the descriptions coming out were, well, cautiously positive. They're expected to resume today.
Any concrete signs of progress?
Egyptian media called the last round constructive. That's something, but, there's a critical nuance here.
Which is?
Hamas apparently expressed a desire to end the war, which is key. But they also criticized the current framework being discussed. They emphasized that any deal must reflect Palestinian demands.
So a gap still exists between wanting an end to the war and agreeing on the terms.
Precisely. U.S. officials are reportedly pushing ahead with technical discussions, trying to find ways to bridge that gap, but it's clearly delicate.
Very much so. Okay, turning to Russia-Ukraine, any updates on military aid or European actions?
On the aid front, the U.S. president mentioned a decision has been made on Tomahawk missile deliveries.
Oh.
But the finalization seems to be waiting on clarification about their intended use, so maybe some negotiation around deployment rules.
Right. And what about the EU side?
EU governments have agreed on new restrictions. They plan to limit the travel of Russian diplomats within the bloc. It seems linked to rising concerns about potential sabotage attempts. So it's framed as a security measure.
Interesting. Does it significantly hinder their operations? Or is it more symbolic?
That's the question, isn't it? Does it just make travel harder, or does it genuinely disrupt intelligence gathering or influence campaigns within the EU? We'll have to see.
Adding to all this complexity, the U.S. also called off some diplomatic outreach to Venezuela.
Yes, another thread in a complex web in the Western Hemisphere.
But let's bring it back home to the U.S. domestic scene, because that seems to be casting a shadow over everything else. This shutdown.
Absolutely. Efforts to end the federal government shutdown just hit a wall. Both the Democratic and Republican bills failed to pass the Senate.
So gridlock continues.
Total gridlock. And it's not just a domestic issue. Agencies are now actively planning for potential furloughs, layoffs, if this impasse drags on.
And that kind of political paralysis in the U.S., it doesn't happen in a vacuum, does it?
Not at all. It complicates every single international issue we've just discussed. It potentially undermines U.S. credibility and definitely feeds into that global uncertainty we saw reflected in the gold price.
Okay, so let's try and synthesize this. For you, the listener, what are the key things to really track moving forward from all this?
All right. First, keep watching that dollar strength, especially against the yen and euro. Are those policy expectations, particularly around the BOJ, going to shift?
Okay, dollar direction.
What else? Second, gold's behavior. Is that $4,000 level a temporary spike due to haven demand, or is it signaling something deeper, a more persistent fear about global political stability?
Right. Gold is a barometer. Third,
look for follow-through. Will OPEC Plus stick to its supply guidance? Do we get confirmation and details on those U.S. truck tariffs? Does the FCC actually vote to tighten tech restrictions? Action versus talk.
makes sense. And finally,
Watch the diplomacy. Do the Middle East talks produce any concrete next steps? Or do tensions just simmer? And will the EU restrictions on Russian diplomats actually have a noticeable impact?
it really is a tangled picture. Policy failures, like the U.S. shutdown, seem to directly fuel financial reactions, like record gold prices and a strong dollar.
They absolutely feed off each other. The shutdown effort stalling completely just adds another layer of complexity and, frankly, worry.
So maybe here's the final thought we leave you with. Consider this feedback loop. We see gold at record highs, signaling deep uncertainty. We see geopolitical friction. How might the failure to resolve a purely domestic issue, like the U.S. government shutdown, actually amplify instability on the international stage? Does that domestic political failure erode global financial confidence even further right when things are already tense?
That's a crucial question. Does the inability to manage basic governance at home send a destabilizing signal to the rest of the world? Something to definitely ponder.
Indeed. Thanks for diving deep with us today.
My pleasure.
We'll catch you next time.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.